Welcome to another episode of the Colorado Real Estate Conversations podcast. Today we've got a new guest, Brooke, and she is going to introduce herself now.
Hey guys, Brooke Shepherd. I am a real estate agent here in Colorado Springs for 20 years now. I started with my friends, and they were real estate agents here many, many years ago, and they were the ones that got me into real estate. Let's see. At a few different brokerages, but this is what I call home now. I started out doing it because I was a full-time mom to my 4 kids, and I wanted a job with some flexibility so that I didn't miss any sporting events. We were a big sports family. So I've been doing it for 20 years, been at a few different brokerages, but I'm very happy with everything at Realty One. And
The whole time in Colorado Springs?
Yep, born and raised here.
Oh, really?
Oh, yeah.
I didn't know that.
Yeah, it's been sad to watch some of it grow, though.
It has grown. Yeah, that's a common conversation is how much it's grown, especially in the last 10 years.
Oh my gosh. Well, for me, like when we lived down by the Citadel, and then we moved up north, and we moved into the Rock Rimmon area. There's a little neighborhood behind Embassy Suites, and we actually lived back there. But anyway, when we moved there, Chapel Hills Mall was doing their grand opening, if you can believe that. And yeah, I just told everybody how old I am. Yeah. But anyway, so I've seen a lot of changes here. My husband and I both graduated from Air Academy High School. And no, we did not talk in high school. We didn't even.
No?
Nope. He was dating cheerleaders, and I was a soccer player. That's the big joke.
Oh, my wife broke up with me in high school. So,
But got back together.
yeah, like a lifetime later.
Wow. How cool is that, though?
Yeah.
Yeah. No, we knew of each other in high school. So he was a big basketball player there. But yeah, he was also in the military. So he moved there his sophomore year.
Yeah, there's a lot of military brats here.
A ton. Yeah.
So you guys did not serve nothing. You guys.
Both my father-in-law and my dad served, but my husband and I did not.
Okay.
Yep. We never left Colorado Springs after that. So, yep. He's a software engineer.
Okay.
Yep.
Right.
So, yep. And so I started really going full-time with real estate about 6 years ago.
Okay.
Before that, I was just doing hit and miss with friends or somebody that I came across. But I think it's been the best job for flexibility.
Yeah.
Because when we had 4 kids in sports at one time, that would have been hard with a regular job.
Yes.
So that's why I love real estate, and I've stuck with it through this whole time, because now I'm a grandma of 4 grandkids and still need that flexibility.
So you went through the last few years that were really interesting in real estate, especially Colorado Springs.
It's been a lot.
It's crazy.
Because I was here for the first recession, and that was right when I first got into it. And so
2008.
So I had to learn how to do short sales real fast, because that's what was going on back then, was a lot of short sales and foreclosures, because it was right when this recession happened. So, and then this time around, I think my biggest thing was when we were getting the interest rates down to 3%, and we're such a high military area, that I kept thinking to myself, this is going to cause problems in about 2 to 3 years. Because we are high military, and then you add to the fact that a lot of our vets, especially the ones that are younger, don't have money to put down. So then they don't have a lot of equity in 3 years when they go to move, when you have what we're dealing with right now, which is home prices are not going at the rate that they need to even break even.
Yeah, in the last 3 years, it's really been flat. Year over year, the numbers are showing growth in sales prices, but it's been flat overall.
There's price decreases.
In some places, there's price decreases. In some places, there's price increases.
It's really weird.
Yeah.
And I think it has a lot to do with price point.
It depends on what they paid.
Yeah.
Because 3 years ago, to even get in a place, I know guys who were bidding $30,000, $50,000 over on a $350,000 place.
Yep.
And then so they're
upside down.
They're upside down.
Yeah.
And it's unfortunate. And so, but
it's heartbreaking.
A lot of them were thinking, I'll just stay here.
Yeah.
For the long haul, and they could rent those places.
Well, and I think so. I had clients that they moved here 3 years ago, military, and they could only afford Pueblo. So we went down there, and they thought they were going to stay there forever. They thought Pueblo was going to be their home. He was going to get out of the military. And then they decided to move back to Georgia, and he got out of the military. But they couldn't even get a renter in there that would almost break even with their mortgage.
Yeah. It's tough. There's a lot we're kind of facing the ramifications of 2000.
Oh, we're definitely doing it. The thing I didn't deal with back in 2008 when we were dealing with short sales is most of them weren't assumables, because there was never a low interest rate like this that could warrant an assumable. Now we have assumables playing a big factor in it. which could be great in some cases. I've seen some families that had a VA loan on it and they were able to just barely break even, right? And so they were able to assume that loan. The buyers didn't have to bring a ton of money to the table, nothing more than they would have, in a normal deal, 10, 15,000 to fill in that gap.
Yeah.
And so that's been beneficial to some people, but some people, they're still upside down, even with, the interest rate low and everything. They still can't even do an assumable on it because they're upside down and they can't get any buyers that can bring that difference.
Yeah. So that assumable is a really great option.
It is for FHA and VA, but there's some, like I had one client recently, we were trying to do an assumable on a property down in Fountain and we could not get them to, they were really tight on price. And then we found out that the lender themselves, the processor who you have to get that assumable approved from, they were not easy to work with, and they were 6 months out on closing on an assumable. Yeah. So one of my friends, she also handles assumable. She's a lender, but she also handles the assumable side of it for people. And so I text her and I'm like, okay, give me the scoop. Is this a processor, that we could go through? And she goes, Brooke, I would have to pre-approve your clients to even think about going that direction and decide if it's a processing lender that I could even work with them.
It's just so because everybody's trying to do this.
Yeah, there's some that do it great. Like I had one assumable that we closed in 70 days.
It's not too bad.
Not at all. So I think it really does depend on the processor. I think with the processors, it depends on how many people they have there too, right? Because what we dealt with short sales in 2008, it wasn't, the reason why they took so long is because they didn't have the manpower for it. And people hadn't been trained on how to handle a short sale.
It's facing the same exact thing.
So now we're dealing with that with assumptions and really, in all honesty, short sales again, right? Because that was how many years ago that we were dealing with those short sales. And there's obviously not the same people there and they didn't have it's just a whole different thing again. So now that's why things are so backed up, I think, is because of the fact that they just don't have the employees there to cover doing new loans, short sales, and foreclosures.
That's really good to know about these assumables because I've been looking for some assumables for some people, and I didn't realize that the closing could be pushed that far out.
Absolutely. Now, she did say they're one of the worst processors that you are dealing with. So it all depends on what company it is.
Okay.
So this particular lady, I literally can text her and she'll tell me if they're one that we can close quick or not. Because this particular property, they had already tried to do an assumable once and it didn't go well.
It didn't go well, or just
didn't go out. It didn't even go through. So they pulled back out. I think once you're looking at 6 months, that's a long time for anybody to sit for a house. And it has to be pretty well priced. And this one, the comps were coming in right where it was. So, they would have to decide if they wanted to wait that long for a house that they weren't getting a good deal on.
Yeah, that's tough because they got to bring a lot of money to the table too.
Well, they were going to have to. Yeah. And that was the thing is that a lot of discussions came up with, well, what are they going to bring to the table and who's covering the commission? It became a big discussion.
A lot of closing costs and associated with that.
So in all honesty, when I talked to my friend who does it, she said the closing costs are about the same.
Right. But
it all depends on who's paying for the commissions.
Right. But normally that's rolled up into the mortgage or into the down payment or something like that. But when there's no, with the assumable, somebody's going to bring the cash right to the table. So that's a big difference.
Yeah. So it'll be interesting to see. But some people are, and this also too, you have to think about when we're looking at a VA assumable. Is it eligibility? So are they willing to give up that eligibility or not? Right.
Right.
So that's another catch too, where FHA, you don't have to worry about that.
Yeah.
They still have to get approved no matter what. And I think some people maybe don't understand that you still have to get approved. It's just a different type of process with that. And you get a great interest rate.
Right. Yeah. The FHA loans are great. In fact, that brings us really to the topic of today is the difference between FHA and VA loans.
That's right.
So I've done FHA and VA loans. And I imagine you've done a lot more than me.
Kind of have, yeah, probably so.
So I'm pushing on your experience here to really pick up some finer points here.
Okay.
So this is a real big. Colorado Springs is a big military community. So I imagine you've done a lot of VA loans. So what are some weird things that have happened during VA loans that have kind of thrown the process into the loop?
I think that what people sometimes don't realize is that a VA appraiser is a lot more detailed than even an FHA and a conventional.
So are these completely different appraisers?
You have to be qualified to be a VA appraiser. You can't just, not any appraiser can do a VA. So that also sometimes when it's a crazy market like it was a few years ago, it made it a little bit more difficult to close on time because they had to find VA appraisers for that. And so they got pushed out quite a bit. on that. So that kind of slowed down closings a few years ago. But so VA appraisals, I think, are a little bit more difficult than FHA. No chipped paint, no broken windows, no health issues in the house. They could go up in the attic and see if they see anything in there. Roof has to be in excellent condition for both of those. If it's not in good condition, then it has to be fixed. And so appraisals can be...
It has to be fixed, or it has to be fixed prior to closing?
Depends. So if the buyer has the funds to pay the roofing company at closing and it's not done before closing, then they will put it in there and the title will hold those funds until it's been done.
So it's got to be held by title too.
That's got to be held by title. Yep. And they hold 1.5. So, but sometimes buyers need that money to go into the next house, or they just don't have that much funds to give. So that can be an issue if they don't have those funds to give, because it can be, it's really boils down to the roofing company and when they can do it. And then when they submit, that it's been done, and then the title company has to pay them. And it can be a little bit daunting. So you would obviously prefer to get the roofing done before closing. So it's just clean slate after closing.
Yeah, that's not that easy to get. Because we talk about 30-day close, it's going to be about 10 days before your inspections are done.
Yep.
And then your appraisal's got to come out after that.
Right.
And then after all that stuff, then you have to decide how to deal with it. So we're already halfway done.
Halfway done.
So you're going to get a roofer out in 2 weeks. Good luck.
Yeah, well, it's kind of interesting right now because Colorado Springs hasn't had a lot of hail this year.
So we got a lot of roofers.
So we've got a lot of roofers that are desperate.
Calls.
Yeah. So I think right now we're doing okay with that, thankfully. But when we get those hailstorms coming through, then it is a challenge in the summertime.
Yeah.
Most roofers right now are pretty good about getting in there. Like I had one that they came in on a Wednesday and they had all the roof repairs done by Saturday morning.
That's impressive.
So it really depends on the roofer and the company. But we also saw some roofers that, you got to be careful with your roofers.
Yeah. It's been a slow market. So actually getting things done has been pretty good.
It has been
picking up, but see what happens.
We will see what happens this year. Interest rates, I looked this morning and they, we're kind of holding steady. They dropped a little bit last week, but not as much as most people would like. So
yeah, I had a conversation with my team about this. And I really think interest rates are going to hover between 5 and 6. And that's about it for a while.
It's going to be interesting. My biggest thing, and we were actually at a forum, an economic forum of probably about 4 months ago. And the gentleman that was speaking, kind of went over, well, I think, we're going to do good next year. And I said, I'm not a math genius. And I've been in the business a while. I said, help me understand how home prices are so high. They're the highest they've ever been. Interest rates are the highest they've been in a long time. And nobody got raises.
Right.
So something's got to give at some point. And unfortunately, a lot of the areas seen more decreases than increases, right?
Yeah. I don't think we're going to see a major correction. There are some of the home builders are seeing some corrections in their earnings. And so we're starting to see that drop, but that's not an overall picture of like the housing market in general. That's new builds and
right.
And their anticipated profit over the next 5 years or something like that. So I think when we see house year over year, people, sellers aren't letting their houses go for, they're pushing hard for prices.
They are, and that I understand that, but the numbers are the numbers at the end of the day too. It's what is somebody willing to pay for your house?
Right. And that's what something's worth, what somebody's willing to pay for it.
Yeah.
And so that's the real hard concept that a lot of people are having to approach. And it's one of those rare times in our market where prices haven't gone straight up.
No, they haven't. And I think that I did a blog once about appraisals, and I said, first of all, you got to get that price. You got to get somebody that's willing to pay that price. But even once you get somebody who's willing to pay that price, if an appraiser doesn't think it's worth that much, then that's it. Somebody's got to come to the table with more money, right? Or lose money, which is either the seller or the buyer. I've had it go many different ways too with that. I think that a lot of it just depends on what people are willing to pay, and then what the appraiser appraises it for, and then who's willing to take the loss out of pocket if it comes in low.
Yeah, I'm in one of the properties I'm under contract with. Our appraisal deadline's next Monday. I have high hopes that the appraisal will come in just fine. So.
Yeah, it'll be a toss-up. I've seen it both ways. Some people, they're coming in low, and some people, they're actually coming in a little higher. But I also think it just depends on the comps.
Yeah.
And what the comps are coming in at, and the appraisers, because different appraisers kind of approach appraisals differently. I'm finding out. I kind of asked a couple lately their opinion on how they would appraise something, and it was 2 different answers.
Right. So
that kind of caught me off guard a little bit. I was like, oh, wow. So it really can vary depending on how the appraiser approaches it.
Well, and it also puts kind of the onus on us as buyer's agents, when we are buyer's agents, to push hard for a good price.
Yeah.
And for a comp price that can actually pass appraisal.
Yeah.
Because some sellers don't want to let it go. Well, that's fine. But if the bank's not going to, give a loan on that price, then it doesn't really matter what you want, what you think the house is worth.
Right.
So that's a tough one. Seeing that a lot. I mean, so it puts us on us to be better negotiators as buyer's agents.
Absolutely. So going back to the difference between FHA and VA, with FHA, you're typically putting 3.5% down. And so it's nice because you can put a lower amount down. But I guess the catch to that too is that then you have the private mortgage insurance, where VA, they can put, a minimal amount down and actually put nothing down, and they don't have the private mortgage insurance.
But it's rolled in the beginning of the loan. So it's tacked right on the beginning. The insurance of the loan, their cost. So there's a cost to a VA loan, right?
Yeah, there is a cost to the VA loan. I don't know that I've never had anybody correlate it to private mortgage insurance though.
Yeah, I was just that cost is rolled right in the beginning instead of paying it out over time. So it's roll up into the beginning of the loan. So like if someone was going to pay, from my understanding, please correct me.
I'm like, I don't know.
Because if somebody, you go with a bigger loan than the house price is going to be, but then because all those costs are rolled in up front.
Yeah, but I don't know that it would quite cover what you pay in private mortgage insurance.
PMI is still a lot.
Yeah, because on a $500,000 house, if you put 3.5% down, you're looking at right around $550, give or take, per month on top of your mortgage.
Right, which is significant.
Yeah, so when I look at a VA upfront cost, it's between 1.25% and 3.3%, depending on the one you go with.
So it's like 2 or 3 years of PMI, but that's rolled up. That's what I mean.
Yeah,
2 or 3 years of PMI
right.
rolled up in front.
But I think an average PMI for an FHA person, depending if the house values shoot up and they can do another appraisal and get it taken out, is usually you're looking at like 10 years of PMI on that.
Yeah, because you have to get below 80% loan to value to get the PMI pulled in. Yeah, and that's after a refi. Now I know, from what I understand, FHAs are really easy to refi.
Oh yeah, absolutely. But you really have. I mean, I have clients write to me all the time. Can you just do a quick CMA and see if we're even in the ballpark?
We're close.
Yeah, because that is a lot of money, right? So it really sucks. And then you don't necessarily, if you can prove that your house is worth that much, you don't necessarily have to refinance it. You can just get the PMI dropped.
Okay. What's the process? Do you know what the process is?
Literally, I think you just apply for it and then provide maybe a CMA to them saying, hey, this is what the realtor's showing. Are we eligible? Now, some people will say you're not eligible for 2 years. So it depends on who's holding your loan and if they have a criteria of when you can look into getting the PMI dropped. Sometimes it's 2 years, sometimes it's 1. 2 years is the most I've heard of when you can't go before 2 years to see if they'll drop the PMI.
Okay. So that's really good. Yeah, so that's really interesting. So if you can use a VA loan and you don't have a lot of money put down, VA loan's the way to go.
Oh, 100%, because you have no PMI really, except for what you have to put up front, right?
Up front, which yeah. So let's talk details about the VA, and then let's compare that over to the FHA. So no money down for the VA. Now that doesn't mean we don't have to have any money.
Correct. I mean, you can still put money down, but even just thinking that thought a little bit, I think the VA funding fee happens whether you have, you have to pay that no matter what.
Exactly.
Right. So
if you put money down and you have an FHA,
you still have to pay a VA funding fee.
Right. Yeah. Yeah.
You see what I'm
still paying funding.
Yeah. Yep. No matter what, you're paying that. So what was your question?
Let's talk specifics. Like, we're talking about how we still have to have money when you have a VA loan.
Correct.
Like even if you're going to finance 100% of the.
Oh, yeah. So let's talk about those costs. When I have people come to me, unfortunately, sometimes the lenders miss out on kind of educating people on the amount of money it costs to even get a VA, and so a VA loan. So what I always sit down with my clients and ask them is, do you have the earnest money? Typically, earnest money is 1% of whatever the house is, so if it's $200,000 house, they're going to ask for $2,000 in earnest money, so
you can't go lower.
It will.
You can negotiate lower.
Oh, 100%. I mean, I've had it cut in half because my clients didn't have the money, right? And most people, I've never had anybody say no. You can
get that back at closing.
You can. And I will jokingly say when I taught real estate school, so that I don't know if you knew that, but I taught real estate school for a while.
No.
Yeah, 3 years. And so my joke was, you can also hand somebody, if you have a really nice boat, but you just cash flow wise, you're not, you can hand the title over.
Yeah, it could be,
and that could be
chickens.
Chickens. Well, and a lot of people, one of my friends, she actually had a Louis Vuitton purse.
Oh, really?
That was the earnest money, if you can believe that. So she held on to that.
And they accepted that.
They accepted it.
That's funny.
Yeah. So
did they get to use it?
She took pictures with it. She was excited for a moment, and she got their permission to take pictures because she's like, this will be the most expensive purse I ever hold.
That's funny.
Yeah. So anyway, but yeah, so it could be something else. So earnest money, is something you have to think about. Inspections. That's another thing people don't think about. We highly recommend you get an inspection because so much can be found in an inspection that you just can't see with the naked eye.
I don't know. The inspector I've used, he's very thorough.
Yeah, my mother-in-law said it best once because she said, I love this inspector when I'm the buyer. I do not like this inspector when I'm the seller.
Yeah, I mean, some people can see that inspection report and they can
overwhelmed super fast.
Oh no, what am I buying?
Yeah. And
it's like, well, this is homeowner stuff.
Right. I mean, you buy a brand new house, and some of my inspection reports with brand new houses lately have not been the greatest either, by the way.
Yeah.
So that's a whole other thing.
I've not done a new build, so fortunately, I am missing out. One of these days, I'm sure I'll get a new build.
Yeah, it's a different process. And I think, unfortunately, inspections are pretty important for any new build now. Okay. And if you can't get one before, if the money's tight for the buyer, they can't get one before, I would strongly encourage them to get one before their year is up.
Oh, okay.
Because if they get one at 10 months after they've owned the house, then all those items, you can request those to be fixed. And that, usually it's a warranty is for the first year on everything. And
have you ever done a VA or FHA new build?
Mm-hmm.
Okay.
Yep. And we did an inspection, and this particular builder did not care for the inspection report and said, well, it passed the permits. And we're like, but that's not even up to code. Basically, it passed a permit, not our problem.
Well, okay.
Yep. So, but I think it's good to have that information there. So if anything ever comes up down the road, structural issues or whatever, well, we can say, hey, we showed this to you and you guys told us that it was permitted. So who's at fault here? Right. The city or the county or you guys? So I think it's always a good idea. In fact, my kids bought a house, a new build last July, and we'll be getting an inspection done at 10 months.
Now, is that going to be, so we've got earnest money. That's going to be right away. Normally go under contract, you get earnest money, which is 1% of the cost.
Yep. And that has to be turned in within 72 hours by law, unless otherwise said in this contract.
Okay. And that's going to go to title. That's where our new buyer is going to get their wiring instructions for the remainder of the money, if there is any more.
Correct.
Then we're going to go to inspections, which cost,
$600, give or take.
$600, depending on.
It depends, because if you get added on, one thing I always recommend is people get a sewer scope. That's my big scope. You just have to, right? So that's another $150. Then if you do a radon test, that's another $150. So that you're adding on to the base, which is probably $400 or so, give or take on the size of the house.
About $600, $700.
Yeah, it really is, and then if you end up doing mold or anything else, mold is becoming a little bit more popular here as well. There's a lot more mold. A lot of people associate mold with the more high humidity states, and that's just not the case anymore.
Yeah.
So, mold you're not going to see in a new build necessarily because it just hasn't been able to form yet. But any homes after that, they can be we've been in new homes and had mold in them.
Yeah, because if they sit there without a roof.
Mm-hmm. Yep. So, anyway, back to that. So then your inspection you want to get done. And then I think the other thing people don't plan for financially is the appraisal. And it depends on your lender. Some lenders, they just include it with the loan. Some say, hey, we want half of it. So we want you to pay half. And a VA appraisal is around $700, give or take, depending on the appraiser. Some will ask you to pay for half of it, or they'll ask you to pay all of it up front, and then you get it reimbursed at closing. Just depends on your lender.
Yep.
So that's kind of it, the closing costs. So you don't have to bring a down payment with VA, but you do need to pay closing costs. And that can be, you can ask the seller to pay for that. And a lot of them do, but then some don't. And you've got to be prepared financially to pay for that, which is 1% to 2%. Well, probably I'd say 2%, give or take, of the loan.
Yeah. And there's a limit on concessions you can roll up into a VA. I think it's 4% on a VA. And so, yeah, that when I'm doing a VA, I always try to roll it into the concessions as best I can.
Yep, I agree. But, it's a different time now because, unfortunately, the predicament we're in is that unless they put a lot of money down, there's not a lot of concessions to give to even break even with some of our sellers right now.
Yeah, I mean, sometimes I find that sellers are looking at the price and they don't even care if the concessions come out.
Yeah.
They don't look at they look at the selling price. They don't look at the net.
Right. Which, do they understand then what they're signing up for? Or are they shocked when they get that settlement statement right before closing?
Yes, it's the answer.
Right. So
they should understand, but then I think it's our responsibility as a selling agent listing agent to teach them.
Yeah.
That this, but a lot of times they get fixated on the price.
Right. And so I think, the title companies are amazing that they have a tab on their website where you can actually go in as the seller and you can type in what your loan is, what you're getting for the house, what you're willing to pay in commissions and concessions, and it'll break it down for you. It's a seller's net sheet.
Yeah.
And so they can go in and figure out and get an idea. And I encourage all of my sellers to do that.
So you don't present them the net sheet.
It depends. Yeah, it depends on that. So, yeah. Yeah, I know that other people in the office have decided not to do that because then if the numbers are off at all, then it's another liability.
Oh, I can see that.
Yeah.
Okay. That makes sense. So that's VA. That's the basic VA process.
Yep.
Then the FHA, the books on that. I've done a multifamily FHA deal, and that was a lot of reading.
Yeah, FHA is really, actually, it's a little bit more laid back than VA. So there's not.
Well, as far as strict, but they have a lot of caveats.
They do. And, you've got the first-time homebuyers program, which a lot of people use because they pay typically 3 to 3.5% of your down payment. So then you're only coming up with your closing costs in that way. Now, the catch to that is, was it a grant or is it going to be a silent mortgage? Most of my clients had the silent mortgage, so you don't pay any interest on that. You don't make any payments, but when you go to sell the house, that comes out of your proceeds.
So that's like a CHFA?
Yep.
Okay.
Yep.
And then, okay, so they're not bringing in the money, but it's coming in CHFA loan. There's 3 different types of CHFA loans.
Yeah. Yeah. So
Some are grants, some are.
That's correct, right? So ideally you'd like the grant, but there's only a certain amount of money a year that is for that. Yeah. And I think, the hardest part for my CHFA clients when they use that loan is that they forget about it, right? Because it's not anywhere, they pay their mortgage each month and they just forget that that's there.
And it's like 3 years later.
It's 3 years later, they go to sell it and they're like, well, wait, why are we 15 grand less than our net proceeds? And I'm like, did you have your second guys? And I just think they're so excited about buying a house, they forget existed.
Yeah.
And that is the shell shock.
Well, and I mean, if you're not paying something for 3 years, I'd forget it.
Oh, heck yeah. So it wouldn't. So I think that's the hardest part, which is another lesson to be learned when, as a listing agent, there is a report called an E&O report.
Yeah.
Oh, and that's where you go to your title company and you request that report and you can find anything in there, which
$5.
Yeah, it's $5. It's great. But I learned my lesson, not necessarily the hard way, but kind of with one of mine because I didn't pull the report because I knew them. I helped her buy the house, right? And it was right after COVID. And this person had applied for what it was called, deferment on their loan during COVID. She got sick for COVID for like a month, 2 months. So she needed the help with the house payment. In her head, she was getting 3 months added to the end of her loan, right? So she signed the paperwork for it. We had it notarized, and it was notarized, and I wasn't part of any of that. It was notarized at her house. Everything was done. Well, then we went to pull the title report after we had gotten under contract, and they had slapped a $70,000 loan onto her house. Yep. Because what happened was they took what she didn't understand, and they lowered her house payment.
Oh, I see.
So ended up taking out this loan that she didn't have to pay on, but it was a loan against the house for the deferment and the drop in payments each month. Because they didn't drop the interest rate, they just dropped her payment. And it over 30 years, it accumulated to $70,000.
Right. It pushed it out.
Yeah.
Pushed everything out.
Yep. So
sounds like a great deal.
Great deal. And she didn't even know. She was so confused. She's like, wait, what is this loan? And we had to call and do a ton of research. And I think, unfortunately, I had 2 clients that they did not know that loan was tapped on to the end. Right. So she went from walking away with like 120 grand to, significantly less because she had a $70,000 loan that she had to pay. So that was a mess and ended up not selling the house.
Yeah.
Because she was like, I don't have money to put down on the next house then.
Yeah, there's no move. So it's good. I pull them every time I go to a listing.
Yep. So that was a lesson learned the hard way. Thankfully, I'd had that experience. So my next client that I was going to that was VA, I went and pulled that report. I'm like,
yeah,
there's some stuff going on here. And some of it, I had another client who I pulled the report and unbeknownst to him, somebody with the same name as him put his address as the mailing address. So they went and put multiple liens on the house, and he never knew it because
Oh, so somebody stole his identity.
to a certain degree, but the guy lives here. And so we're not quite sure how it happened, but there was probably 4 different liens on the house that were not his. They were associated to somebody else.
They're finding him and they got the liens on the house. I got you.
Yep. And so he didn't know on any of those.
All right. Well, so it sounds like we've outlined all the nightmare scenarios. How often is it happening?
Well, actually more often right now because a lot of people did the deferment loans.
Oh, they did. Okay.
Yeah. So anyway, back to VA and FHA loans. But that's the biggest difference really. Just putting 3.5% down versus nothing.
So, I mean, with all these things that have happened, do you recommend people use these products?
100%.
Yeah.
Also, you're going to buy a house right now.
Right. Well, but I mean, my point is like how like this is not these nightmare scenarios. They're not happening all the time. This is not every.
No, and I think it's just people not understanding the process, and when you don't have a realtor with you, like she wouldn't have, she didn't think to call me and ask those questions. And honestly, I don't know that I would have known. I would probably told her to call a lender and see to make sure that whatever they were doing, the deferring she understood it. Because unless I'm looking at the paperwork myself, if she just calls and asks me, hey, I'm going to do, a deferment of 3 months. Now I know to say, hey, double check that, right? But most people in today's day and age are not deferring loans. That was just a COVID thing.
Okay. So it's really important to have a team.
Yeah.
When a homeowner is going to sell.
Yep.
It's really important to have a great team, like a lender team, or for them, they don't need a lender, but for the next property probably.
Yep.
And they need to understand the products that they currently have.
Yeah.
And they need to have the agent help them put together and understand all the details. Because that's really our job is to really help them walk through those tiny little details.
Right.
Can catch everybody up.
And that's exactly it. I mean, I think that people sometimes don't understand how important a real estate agent is even after the deal is closed.
Right.
There's things that a lot of my clients come to me, hey, Brooke, what do you think about this? What if we do this? And so I think it's good to have a realtor just because of the fact that you don't know what you're looking at. The contract to buy and sell is like 24 pages long when you go to buy a house, right? So,
well, not only that, it's 24 pages long. It's extremely complex. It's the largest investment most people will ever make. And there's a lot of potential for mistakes.
Oh, 100%.
And so I think it's super important to have the right team. And every homeowner should have a team, not just, one agent's great, but you need to have, always seek legal advice and always.
Oh, 100%. I tell all my clients, when they ask me about capital gains tax, whatever, I'm like,
accountant.
I'm like, go to an accountant. That's not thing and that's why we have the lenders. And that's why most of our lenders we can get a hold of them via text, right? Because it's just those questions that we shouldn't be answering because we're not lawyers and that's not our specialty, So I think everybody should think about that when they're moving into it, is that they need to make sure that they have a good team in buying a house and even selling one, really.
Yeah. And when you get an agent, the agent has a team behind them, and that's the connections that you're really, one of the biggest benefits is all the connections they have. Like we have, that we can connect them to the right. Like we've talked about not using lenders before because we run into problems.
Right.
So we have lenders that we use.
Yep.
All people that we use on the regular basis that we trust.
Absolutely.
And I think that's part of the deal is being good agents is to show, that's what we bring to the table. Those connections, understanding of the process and experience.
Yeah, I agree. And I think another thing that probably a lot of agents aren't doing, and it gets overwhelming to our buyers or our buyers who haven't bought in a long time, right, is that we don't explain well enough what they're signing. And some people, the way they want to see the buyer agency agreement or the listing agreement, some people are high D. They need you to go over every single part of it. Some of them are like, I don't care. Just give me the summary, right? And so what I have gotten into the habit of doing is I have a buyer agency disclosure, or not, it's like a pamphlet book thing. And it goes to every single document you're ever going to get and what it stands for. So you're just not so overwhelmed with all these documents that we're emailing to you and saying, hey, sign this, sign that. So I think it's just informing our sellers and buyers what they're going to be looking at ahead of time too, because they can get overwhelmed with all the different documents.
It's a lot.
It is a lot.
A 24-page contract is difficult to read.
Well, yeah. And then you have the seller's property disclosure, and you have square footage disclosure and mold disclosure and lead-based paint disclosure. And so I think that for you and I, we're used to all those disclosures. So sometimes, unfortunately, as realtors, we sometimes forget how overwhelming this process can be for a buyer or a seller that haven't done it in a very long time. And by the way, the documents have changed since then, more than likely. Yeah. Right. Every year
they changed for me since I've bought it.
Right. So I think it's realtors just walking along and kind of helping them understand, because it just gets overwhelming. And then they don't know what they're signing or they don't know what they're agreeing to. And then they come to you going, well, wait a second, I didn't understand this is what this meant, So I think giving them as much information as we can as we go along is the best way to go.
Yeah. I mean, I always fail in the over communication. Well, I mean, you just sit down and say, hey, look, we're going to go over this. It's going to be boring. So let's get some coffee and let's talk.
Yeah.
And we'll break it down and we'll go, that we can go through this. I can explain it to you. And I always say, and I have a really great lawyer that I could recommend it.
Right.
We'll do a better job.
Yeah, exactly. So I think it's just keeping people informed, and it's just overwhelming to a normal everyday person.
Yeah.
So our job is to make sure they understand everything.
Yeah. I mean, we try to take away the stress of the buying a home is stressful. Selling a home is even more stressful.
And then you add packing.
Right.
And transferring all your information and, all that stuff. So it can be a lot.
There's a lot going on there. And so if we could take away one piece or two pieces of the puzzle and help them walk through the process a little easier with a lot of stress. It's a lot of stress.
It is, and
it's one of the most stressful, pieces of somebody's life.
Well, and yeah, I mean, it really is. And then some people will say it's the most stressful thing on a marriage, right? So it can be hard, So I definitely think that, we need to educate the best way we can, and starting with giving people, like you and I talked about today, about this is how much it costs to buy an FHA, buy a VA house. These are the costs involved. Because I just, our lenders or builders or whatever are really good about saying no money down. Come buy with us today. Well, they're right. Some of them no money down, but there's also a lot of costs involved in that. And I think people walk into it not understanding that there is more cost to it than that. And you just don't get to walk into a house for free.
Yeah. I always try to say to buyers that I'm bringing on, I said, let's slow everything down. Let's move it out a little bit if we need to, but let's get in contact with the lender. I'd say a year in advance. And then, and if you can't, as soon as possible, and then get talking about little details, because every single little detail can make this whole thing move a lot easier. You get your credit score above a certain point. If you get everything approved ahead of time, then when you go to find that right home and that all of a sudden the house that you wanted gets on the market, you're ready to go.
Yeah.
Not stressed.
Well, and that's it. And I think, a lot of people, especially our younger generation, they don't necessarily, they get overwhelmed.
Right. Because they don't have
the credit stuff.
Coming.
Yeah. And I think the credit stuff can overwhelm them, or they're embarrassed because, everybody makes mistakes. That's just part of life.
Especially in my 20s, my credit was terrible.
Yeah, exactly. And so I think I would encourage everybody. It doesn't matter how old you are. Everybody's gone through something in life and it's caused issues financially. We've all done it. There's very few people that haven't had struggles, right? And so my point is get ahead of it.
Yeah.
If you are nervous and, hey, you may not want to talk to your realtor about it. You may not want to go talk to their lender they recommended. Then just go meet with a credit person. And honestly, a lot of the lenders are phenomenal and they have resources with their software that they can say, let me pull a credit report and we're going to tell you, the system's going to tell you, pay this down, this down, this down. And within 3 months, you can buy a house with better credit. So I think a lot of people don't realize that lenders are actually a phenomenal tool for the most part. Yes. Most of them are, and they can help you get your credit score where it needs to be within a few months, unless it's major stuff on there. But then at least you have a time frame, right? You're like, oh, okay, well, I can't buy this now because my credit score is 640 and I really want to be above 700. Let me see what it would take to get me there.
Yeah, I think Mashira said 720 is ideal.
Yeah, it is. And so, but figure out how you get there and have your lender help you get there.
Yeah.
You know?
Right. And that's not just, I need to pay my bills. No, they have specific plans.
Yeah.
They can really help you get your credit score.
They really can. And guys, they've worked with everybody.
Yeah.
There is no shame. There is no embarrassment. They're just, hey, let me help you get there. And I think people right now, especially because there's so many struggles in the economy, they just don't know what to do. And they're embarrassed because they struggled during COVID. I mean, COVID was a nightmare for so many people financially. Yeah. So there's people that, need to fix things and get better prepared financially. And they need to be okay that a lender, most lenders are not going to judge and they're just gonna be like, let me help you get there.
Yeah. Yeah. Especially lenders that we're going to recommend.
Yeah.
So, and I think people knowing what's coming, that's one of the reasons that's actually the main reason I do this podcast is because I want people to understand the process better. If we can talk about like a specific situation with a buyer, well, that person did it, and this is the steps that they had to do. Yeah. But this person's there to walk through this with me, and I know these problems might come up.
Yeah,
and if they come up, we have a plan.
Exactly.
And we've been there, done that. And if we haven't ran into that problem, somebody on our team or somebody at this
Oh my gosh.
has,
Heck
and
yeah.
they're more than willing to help us out.
They really are. I mean, I get a little frustrated because I don't like that people judge so much, and so I want people to always feel like no judging here. We've all been there, and we know somebody that's gone through what you've gone through. I mean, we run into so much stuff as realtors that I'm like, it's okay. When the time is right, you'll be able to buy. Don't be upset. Get that mindset of I'm going to just make it happen.
Yeah, just going to get it done.
Yeah, it's not anything to be embarrassed about. It's just setting a goal that you want to buy a house in a year then, and that gives you time to save and pay things off.
Yeah, my buddy Daniel, who I had on the podcast a couple podcasts ago, he went from 18 months to having the idea to getting it done.
Yeah.
And sometimes it just takes, that was fast, I thought.
Yeah, I mean, that's pretty phenomenal.
Yeah, so it takes time. I mean, in your 20s, you have to make a decision, but then start talking to people right away because you can be guided in the right direction to save you a lot of time.
Yeah.
So that's really the purpose of this, is to really help people get along the right path and understand what's coming.
Oh, yeah.
Because it's done. Like, I remember my 20s, I was like, I went to go buy a house. I thought, this is too much.
Yeah.
I just can't. And then nobody was there. There weren't podcasts back then. But
no, there wasn't. And you're making me giggle because when my husband and I were engaged, we were going to buy a townhome, right? And so, of course, we didn't know what it would cost to buy a house back then. I mean, we've been married 32 years. So we had some money in savings and we put earnest money down on a adorable townhome, right? We had a realtor. We thought we were doing everything right. Well, then we went and looked at our budget and we realized we were getting married in a few months. We're like, if we buy this house, we don't get to go on honeymoon.
Oh, no.
And we had already put a deposit on the honeymoon. So being naive, because we just didn't know, it was 32 years ago. We canceled the check on our end through our bank. I look back now and I'm like, oh, Brooke. But anyway,
whoops.
And so then the real estate agent called me. He's like, hey guys, your check bounced. I'm like, oh no, we stopped it. And he's like, what? And we're like, yeah, we decided not to buy the house. He's like, you can't do that. And I was, we can't do that. So naive. I wasn't even 21 when I got married. We were just so clueless. And I look back now as a realtor and I'm like, holy crap. What did we do? I can laugh about it now, but
this is a great, let's take that for a second and let's go to the side. So you're a VA buyer. So you're an FHA buyer. And something changes and you can no longer buy that house. Yeah. There's ways to get out of the contract.
There is.
That aren't disastrous.
Disastrous, and really, boy, back then, I don't think, 32 years ago, I don't know that they even had inspection objection.
It's a couple pages long. There was a contract.
Yeah. So I would wonder how that worked. I think we thankfully just had very gracious sellers that were like, oh, these are young kids that just didn't know, Yeah, but I look back on that. But you're right. There are ways to get out of it now. And I mean, I just cringe looking back. I'm like, oh, I can't believe we did that. Because you have inspection termination, inspection objection. There's a few different other lending ones that you have, and of course, appraisal.
Yeah, and it's important to be honest and get out of the contract for specific reasons.
Yeah,
we're not going to just use the inspection objection to get out of that, or inspection termination.
And really, part of the contract, you're buying in good faith, right? So
right, you enter the contract in buying in good faith.
Yeah,
so
you can't just get out for nothing.
For nothing.
Did we know that 32 years ago? Absolutely not. I look, and I still giggle about that. But yeah, I think that that's, again, as your agent informing you, you're walking into this in good faith that you're going to get this house to close.
Right. And then again, it goes right back to the point of having a good agent who is willing to talk to you.
Yeah.
And sit down and go over the details.
Yeah. Because a lot of people don't know, they don't understand the earnest money part. I just had somebody reach out to me and they went under contract. The inspection was done and they got the inspection termination. And they were like, wait, what? They had no idea that you could terminate on inspection termination. The seller didn't.
The seller did.
So they were like, well, we keep the earnest money, right? And they're like, no. We're like, what do you mean? So I think that that's another thing that's just informing the seller. This, and this is when people can get out. I always joke that I hold my breath until after everybody signed inspection resolution. Then I still hold my breath, right?
Yeah.
But it's not as much.
It's just
I breathe a little bit.
It's not over till you close.
It's not over till you close. So I do think that it's helping your sellers understand at one point they would get the earnest money. And unfortunately, I've seen deals. My son was in real estate for a very brief time, and his one and only deal, we went to go to closing, and it had been delayed by 5 days because the lender was in the Caribbean. And we thought he had it under control. And well, the bummer part was that the buyer did everything the lender said. He didn't put any money on his credit card. He paid all of his bills on time. And because the lender postponed it 5 days, of course, the credit report had run out. It's time.
One more time.
ran it one more time. He had not done anything wrong, but his credit points dropped by 5 points, and he was no longer, the day of closing, was no longer allowed to close on the property and lost the house. It just was like, wait, what? And the kid was devastated, because he was like, wait a second, I did everything you told me to do, and you're the one that delayed the closing, not me.
Right.
Yeah.
Yeah. That's tough.
So,
I mean, I'm not saying the lender shouldn't go on vacation, but let's plan a little better.
yeah.
Or have somebody step in.
Paying attention to that too.
Have somebody else step in for you.
Yeah. Right. So that was, and my son was devastated because he had money in savings and he needed that closing, to make ends meet because he was just starting off and he was devastated. It was a few months of, savings right there.
It happened.
So, those are the things that you got to think about too, when you're moving forward with stuff, is making sure that your lenders are committed and making sure it closes on time.
Yeah. And it's good to talk about that right at the beginning when you're getting ready to do a contract to buy and sell. So that's what we call like an offer on a house. We want to say, okay, well, when do we want to close?
Right.
And then what's our availability earlier and later?
Right.
Is there anything coming up? And then we talk about it with all the members of the party. And if the lender's not going to be there for the beginning or the end, somebody else needs to step in, somebody else on their team or another lender.
Exactly. So, yeah. So, I just think there's so many moving parts to buying and selling a home. And it's really important that you have people there, to help you through it and know what they're doing. And if they don't know, that they can openly admit it and make sure they get the information to make it go through. In 20 years in business, I'd say in the last 3 years, there has been so many things that have come up that I had never dealt with. These appraisal gaps that we were dealing with 3 years ago, that was not even a thing before then, right? These assumptions. I didn't do my first assumption until a year and a half ago.
I was talking to a client last night and he's convinced that appraisals are total BS because of these gaps. Because of all these problems. He's like, well, I'm willing to pay this, but my appraiser said, and he lost the place. And I said, hey, listen, the appraisers is doing their job.
They are. And it's not an easy job to do. Especially when we had the appraisal gaps going on, right? Because it was still showing up. What people didn't realize is they bought it for $600. The appraisal came in at $550 and they're bringing that $50,000. Well, then it's saying in the MLS, it closed at $600, even though the house was only worth $550, right?
Right.
They're closing at $600. So they're, essentially is a $50,000 gap in 1 month.
And so that means the next house on that block is going to be appraised at $575.
Right.
If it was the same house, they'd be bumping that print out at $575.
Right.
It's going to be bumped up. But it was happening so fast back then. Prices were jumping.
It was insane, and I kept saying to my people, especially ones that were military, I'm like, guys, come on. You really need to think about this because when you're going to sell in 3 years,
You're going to be in trouble. And now
you're going to be in trouble. And that's what we're seeing now. And I think that unfortunately there was a lot of agents that didn't advise their clients properly because they just wanted to get the deal to close.
They wanted to roll the tide because everybody's like desperate to get into a place.
Yep. And it was hard. I had one couple that I was their parents' agent as well. And I called them and I'm like, hey, they're going to pay this gap. You understand if they sell this house in the next 2 to 3 years, they may be upside down because that doesn't go towards anything. It's just free. And basically what he told me at that point, because I had their permission to talk to their dad, right? And I just said, I just want everybody to be aware of what's going on here. And he basically just said that he understood that the kids got more for their house they were selling than they expected. So it was basically free money that they didn't expect.
Right.
And they went ahead and did the gap. And I was like, okay, I just need to know that I can sleep at night knowing I kept you informed, that you understand what the kids are walking into. And I made sure the kids knew, you understand this is money you'll probably never see again, guys.
This is the biggest investment most people are going to make.
Yeah.
It's, and so I think it's super important to have an understanding of what's going on.
Yeah.
And slow down.
And make sure your agents know, right? The agent you're working with, because a lot of this stuff is new to everybody. Thankfully, I've been around the block a few times, which my gray hair can show, but I definitely have an idea.
It's not that obvious.
Well, let's be true. I had to spray a little bit this morning. My husband laughs at me. He's like, oh, Brooke. I'm like, it is what it is. But, I'm a grandma. Of course, I'm going to have gray hair, right? But yeah, so I think that it's also making sure that if your agent has never experienced some of these different situations, that they work with people that have, and they are humble enough to go, hey, can you help me walk me through this process? And I have been on the other flip side of it too, where I was the seller and the buyer's agent was newer. Let me tell you, I am walking them through the process too on the phone. I'm like, hey, just wanted to let you know this part of the contract, make sure you're filling it out this way, because we're supposed to be helping each other out. It's not me against you. It's us helping each other out. So I have no problem, helping out other agents.
It is better for them to get that on there.
It is, but some are solo, right?
That's true.
And they don't have necessarily the support they need in the office. So, and it's not anything that would change the contract as far as helping a buyer or a seller, one getting better than the other. It was more just stuff that...
Just getting the details right.
Getting the details right and making sure that everybody's on the same page going into the contract, because the contract is there's just the smallest little thing that you can be wrong on, and it affects the buyer or seller immensely, right? So it's making sure that everybody's on the same page with stuff when they're moving into the contract part of it. So
that's one thing I really like about our brokerage here is that we have a lot of great experienced agents, and everybody's very open and very collaborative, not competitive with each other.
Not at all.
So, which is great.
Yeah, I love that, because it's just nice to be able to know that I can come into the office every day. And if I'm even having a blonde moment or gray moment, and I can't, then I can just go, hey, have you come across this? Or how did you handle this? I can't remember how I did it last time. And then it kind of, oh, yeah, that's right. That's how I did that, or situations that come up that we haven't come across yet. We're all so willing to share that information with each other to make sure nobody else goes through that.
Yeah. Yeah. That's part of this podcast. Like, it's also having you on, just helping me out, learn.
Yeah.
Helping my clients out, and hopefully your clients too.
Yeah. I just want to help people out. That's my big thing.
That's why I love
I think it's great that you do this, because we need this. I think people need to be able to go to resources. I mean, what do we do when we have a question about something? Where do we go?
Yeah. Right now we go to podcasts. I mean, everybody does.
Podcasts and YouTube.
Or yeah.
Seriously though.
Yeah.
Like we have a weird smell in our refrigerator with our water.
So you just Google it.
Dude, I Googled that thing up. I'm like, Matt, it's this, or this, and this, and this is what we need to do, And my husband, we couldn't afford for many years to pay for brakes on our cars. My husband's like, what are we going to do? And I'm like, dude, you're going to get on YouTube. You're going to figure out how to replace brakes on a car. Let me tell you, that man can do it without even thinking twice about it now. And it's saving us $500
Yeah, it saves a huge amount of money.
Huge amount of money. And honestly, putting brakes on the tire, it takes you, if you know what you're doing, it takes you about half hour, 45 minutes tops.
Yep.
And you're saving $500.
The second time it takes you half hour. 40.
Yeah, well, he's been doing this for like 15 years now. And of course, he'll get a text from his kids. Yeah, my brakes are squeaking. But even I think it was the alternator on my son's car. My husband was with our son. He's like, his car won't start. So I typed in, why won't a Toyota Camry 2000, blah, 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 not start? And they were like, it's the alternator. So my husband never done it before, went and bought the alternator. And the next morning they're in the Target parking lot, and he pulls out YouTube and they do it together. And I said, was it hard? Like, did it take a long time? Because an alternator to replace it is like $750 at the mechanic, right?
It's really not that hard.
He goes, Brooke, it took me longer to find the part at the AutoZone store than it did to replace it.
It's like 4 bolts.
Oh my gosh. We were so dumbfounded. Yeah. A little annoyed with mechanics. I'm like, how can you charge $750 for something that, because, supposedly it's time. Like, there was no time in that. Not that I should really be ranting about mechanics. But anyway, point being is that I think
they bring a level of expertise, just like we bring a level of expertise. And people pay us for our expertise, and we pay them for their expertise.
We do. But anyway, well, thank you for having me. I appreciate it.
I really appreciate you doing this. This is great. I think this is going to be a great topic, and I want to continue to further go down this path, because VA and FHA, we're seeing a lot of people and they really need it. And because home prices are so high, and until incomes rise, we're going to be pushing to get people into houses.
Or something's got to give.
And I just don't know, what's going to happen there, but I can't see the future, but I think I am hopeful for Colorado Springs real estate. I think the market, and that's one of the big reasons I got into real estate.
Yeah.
Because I think that the real estate market is just an enormous way for Americans to build long-term wealth.
Yeah. Well, and I think what people don't realize is Colorado Springs, because we have 5 essentially military bases within
Very
half hour.
Stable market.
It is, but it also is always changing, because every 2 to 3 years, we have new coming in, right? Where Denver, when they get hit hard in 2008 with the recession, they got hit hard. Like, we were not hit as hard down here, because no matter what, we still had a little bit of flex. Now, back in that time in 2008, though, the military really slowed down on moving people.
Yeah.
So that was what kind of slowed it down, but we still did better than Denver.
Yeah.
Because we had to move people still.
And we still there's a big chunk of the population that's always going to be employed, military.
Yep.
So we have a very stable rental base, very stable, home ownership base.
Yeah. Rental prices are dropping a little bit, though, on homes.
Yeah.
Yeah, right now. So it's kind of a hard one for some of the investors.
Yeah, it depends on, well, the report I read about the apartments is that the rental prices are going up.
Some are going up and some are going down. I think it depends on the area.
Depends on the area. Okay.
Mm, yeah, because we're watching that for my daughter.
Yeah,
We're
because I have
being
a
close-
commercial property down off Powers. We're getting 8.6% higher than we anticipated.
Is that for renters, like home renters?
It's an apartment complex.
Really? Huh. Curious about that.
Well, we'll talk about that off camera.
That's right. All right. Well, thank you so much.
Awesome. Thanks, Brooke. I really appreciate it. All right. This is the Colorado Real Estate Conversations Podcast.